Welcome to Alpha Insights. I'm Neva. Today we're doing a healthcare roundup with Josh, who tracks the sector like a market historian tracks cycles. Quick note before we start, markets are closed this Saturday, so when we talk about market context, we'll be referring to developments as of Friday, January 23rd, and what to watch when trading resumes Monday, January 26th. And remember, if you have questions as we go, you can ask us at Stock Alpha I.
Thanks, Neva. Great to be here. There's a lot in healthcare this weekend, some headline risks and a bunch of smaller, constructive stories on digital transformation and research. Good fodder for investors to sort through.
Let's start with the big headline people will notice: the legal trouble around Zynex Medical. What should investors make of that?
Legal indictments change the risk profile. With Zynex Medical, former executives were charged in a fraud case. That raises reputational risk, potential fines, and regulatory scrutiny. For investors, that often means increased volatility and the possibility that management time and cash flow will get diverted to legal defense rather than growth.
So, what's a practical way to respond if you own the stock or are thinking about it?
First, check your exposure and the clarity of your investment thesis. If you own Zynex Medical, read what the company has said and follow court filings. If you don't have high conviction that the business fundamentals can withstand legal costs and lost trust, consider trimming. For others, this is a candidate for tighter position sizing or a stop limit so one headline doesn't derail your portfolio.
Another big public story, reporting that the US could lose its measles elimination status. That sounds more public health than Wall Street, but could it move markets?
Absolutely. Losing elimination status would focus policymakers and funders on vaccination gaps. That can translate into more federal and state money for immunization campaigns, plus higher demand for vaccines, diagnostic testing, and community health services. Players that supply vaccines, testing platforms, or public health contractors could see a policy-driven tailwind.
Any examples of names investors might watch if that story develops?
I'd watch companies exposed to vaccine manufacturing or public health services and consumer health providers that work in community clinics. Also, the large diversified healthcare names that sell over-the-counter products and primary care services can see shifts in demand. But the key is to look for explicit funding announcements or procurement contracts. Those are the moments narratives turn into revenue.
You mentioned a lot of positive noise on digital health and CIO priorities. Break that down for listeners. What's actually changing, and how should investors parse it in it?
The trend is practical, not just hype. Chief information officers are preparing for AI, connected care, and better ways to capture patient data during education programs. That means investments in software, integration, workflow redesign, and change management. For investors, the translation is simple. The vendors that can prove recurring revenue from deployments, show measurable cost savings, or point to contract renewals and pilot to production conversions are more likely to build durable value.
So look for contract wins and proof points rather than press releases?
Exactly. RFPs, multi-year contracts, implementation milestones, and vendor commentary and earnings calls are the signals. Also watch health systems for pilot launches that scale. When pilots turn into enterprise deals, that's where revenue follows.
There were also a couple of research stories, things like possible prostate cancer targets, and a deprescribing questionnaire validation. How should investors think about those?
Those are longer horizon items, but important. Early research like tRNA fragments being linked to prostate cancer progression is a scientific lead. It needs follow-up studies, patents, and eventually partnerships to matter commercially. The deprescribing tool validation is more immediately useful for clinical practice and could influence decision support tools and primary care workflows. Investors should track follow-up publications, patent activity, and any biotech or medtech collaborations that move these findings toward trials or productization.
Heading into the long weekend, what are the concrete catalysts to put on your watch list for Monday?
Shortlist: 1. Any court filings or company statements about the Zynex medical situation. 2. CDC comments or state campaign announcements tied to measles and vaccination funding. 3. Vendor or health system contract announcements and RFP activity for AI and connected care. 4. Follow-ons to the cancer or deprescribing studies, new publications or early partnerships. And 5. Earnings mentions if any providers or vendors update on implementation progress.
Quickly, risk management rules of thumb for listeners who want to be prepared.
Be selective. Tighten position sizes in names with headline or regulatory risk. Use stop limits or defined exit plans where you lack conviction. And favor companies that can point to recurring revenue or concrete contract wins when you want exposure to digital health.
Great. Let's wrap with 3 quick takeaways for listeners.
1. The Zynex medical indictment raises real legal and reputational risk. Monitor filings and company disclosures and consider trimming if you're not confident. 2. Potential changes in measles status could prompt policy-driven demand for vaccines and public health services. Watch funding and procurement announcements. 3. Digital health progress is real but incremental. Prioritize vendors with contract wins, recurring revenue, and measurable implementation results.
Excellent. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights and our written notes, head over to stockalpha.ai. Thanks for listening, and we'll pick this up when markets reopen Monday.